Hi, this is Mr. Evans. This video is going to evaluate investment appraisal. So there are videos now on payback, average rate of return and net present value, which consider how to calculate and interpret each method of investment appraisal. Here are the key definitions of the different approaches. The key thing that you need to remember is that investment appraisal is a technique that managers use to assess the viability of different projects. Should we invest in this factory? Is it going to pay off financially if we do so? Could we expand abroad? It's going to cost us this much, but it's going to get us this much money in. Is it worth our while doing so? You need to be aware of how to calculate each method, how to interpret each method, and the advantages and disadvantages of each method. So this video is just considering investment appraisal as a tool overall. What are the advantages of it? Well, number one, it's going to encourage a logical approach to making investment decisions. We're assuming we're going to get this much money in, we're assuming it's going to cost us this much money, and therefore we can make some calculations, and we're taking a very logical approach to decision making. It's like that scientific versus gut instinct approach to decision making that we discussed in Unit 2 of AS. Should we be taking a scientific or a gut instinct approach to decision making? And probably overall we should be doing a little bit of both. But this is very much a scientific way of making decisions. Second advantage, the range of methods allows both the timing and profitability of projects to be considered. So we know the advantages and disadvantages of different methods. We can use the different methods to look at the project and consider both timing of payment and the profitability of the overall project. And this method of investment appraisal allows us to compare, say, projects A, B and C. If we've got £50 million to invest and we can spend it on A, B or C, we can put our assumed revenues and costs into the model, and we can compare these different investments, so it's very helpful. On the other hand, investment appraisal makes assumptions about the future which determine the figures used in calculations. We're making all sorts of assumptions. We're assuming that we're going to get this much money in, it's going to cost us this much money in 2 or 3 years' time, when there can be huge changes in the external environment. Our figures, our data might not be that accurate anyway. So we're really just guessing really what is going to happen in the future to produce these investment appraisals. Okay, we might have a bit of market research that goes into it, but we all know how unpredictable the future can be, particularly the further you get into the future. Investment appraisal, yes, it's helpful to do, but we need to take it with a pinch of salt, because the further we start trying to guess into the future, the more likely we are to be wrong. This considers only financial factors when many more issues need to be taken into account. So I'll talk a bit about that on this slide. So overall, investment appraisal is a very useful tool to assess the financial viability of a project. Financial viability, i.e., should this project go ahead financially? Will the revenues earned from it outweigh the costs incurred, and therefore will it be profitable? Okay, so investment appraisal is very useful for this assumed profitability of a project. However, we're going to need to consider some other factors before making an investment decision. This is a quantitative approach. It's a numerical approach that doesn't consider qualitative factors. So, we would want to obviously consider the finances, but before we go ahead, we may, with a project, we may want to consider other things. So, for example, if we're talking about investment in a new factory, right, we might calculate it that it's going to be extremely profitable. However, if we're building it on an area of outstanding natural beauty, or if it's going to increase our greenhouse gas emissions, we might want to consider that because it could damage our reputation. If we're thinking about moving abroad and we calculate that it's going to be very profitable, we might have to think about, well, what's the impact going to be on our human resources? Okay, it might be very profitable, but if we're going to send our workers overseas to work, that might make them unhappy, decrease their motivation, and it could be damaging to the company in that way. So we need to consider both quantitative and qualitative factors before a final decision is reached. Investment appraisal, very helpful to find out the financial impact of a project, but we're going to want to consider any investment from a range of angles before we decide to go ahead.